Hello students, in this video I would be covering income tax amendments applicable for December 2024 exams, and this amendment video would be relevant for both old as well as new syllabus as the amendments are same guys. We'll start with, before I start I will just give some disclosures. So what is the Finance Act applicable for December exam is Finance Act 2023 and the previous year would be 23-24. And accordingly, the assessment year would be 24-25. Any calculations in the exam would be asked for the respective previous year or assessment year. And I have prepared a reference material where I have highlighted all the changes or amendments in red color, guys. And whatever content I have taken here is from my regular study material. So while watching this video, if you guys are keeping my regular study material with you, it would be very helpful for you guys to connect and study. And wherever the amendments are very small, you can update it in your regular study material itself. Fine. And the amendments, I would be covering it chapter wise so that it would be easy for you. Yeah. So the first small changes, guys. So whatever amendments are there, very small, nothing major. So first amendment is with respect to the third head of income, that is profits and gains from business or profession. There we have amortization of preliminary expenses under section 35D, where I can amortize the preliminary expenses in 5 equal installment, guys. Correct now? Yes. Sir, what is the change here? All these are regular, whatever we already covered, same thing is applicable. The only addition what I have highlighted in red color is an amendment. Sir, what is it? Audit report along with statement containing the details of expenditure is to be furnished at least 1 month prior to the due date for furnishing the return of income under section 139 subsection 1. Guys, whoever is claiming the deduction under section 35D for preliminary expenditure, they were supposed to file audit report 1 month prior to the due date of filing their income tax returns. What is the due date for the assessee for whom the audit is applicable is 31st October of the assessment year. So that means 1 month prior to that means what? 30th September. So on or before 30th September, a copy of audit report has to be filed, and along with that, a statement containing the details of expenditure. Sir, what details of expenditure? Actual preliminary expenditure. So whatever is the actual preliminary expenses incurred, right? Actual preliminary expenses, whatever is there, you have to submit a proof of it along with the audit report. This is an amendment. Clear? Yes, sir. Next is with respect to section 43B. One of the important change has happened here, guys. 43B. Sir, what is 43B? If the payments which are covered under section 43B is not made within the due date of filing the income tax return, which is given in section 139 subsection 1, then that payment will be disallowed in the current year. Sir, what if the payment is made after the due date of filing the income tax return? Then such payment will be allowed in the subsequent year, guys. That is in the year in which the payment is made. So we had a number of expenses covered. You can see from A to G. So if I have to claim this expenditure, I have to make the payment not within 31st March of the previous year. It is within the due date of filing the income tax return. Agree na? Yes, sir. All this were already there. Now there is some addition. What is it? We will see. As per section, this is also part of section 43B only, but a different category expenditure, guys. As per section 43B, sum payable by the assessee to micro or small enterprise for supply of goods or services beyond the time limit specified in section 15 of MSME Development Act 2006. What they are telling is, section 43B of Income Tax Act is giving reference to section 15 of MSME Act. So section 43B is telling, if the payments are made to micro and small enterprise, and if the payment is not made within the due date given in section 15 of MSME Act, then it is disallowed in the current year. Sir, then when it will be allowed, sir? In the year in which you make the payment. In the year in which you make the payment. Guys, please be careful. Don't get confused. For this items from A to G, the due date to make payment is the due date of filing the income tax returns. Same thing will continue. For the following payments, what are the due date to make payment? Within the due date of filing the returns. Whereas now whatever is the new addition, for that what is the due date to make payment? It is as per section 15 of MSME Act. Now we will see what is section 15 of MSME Act telling. As per section 15 of MSME Act, if there is written agreement between the assessee and micro or small enterprise, now assume I have purchased the goods or I have taken the service from micro and small enterprise. If I and micro and or small enterprise have an agreement, then payment has to be made as per the agreement. In the agreement, we would have mentioned the due date and all, or within 45 days of accepting the goods or services, whichever is earlier. Now assume guys, you are a small enterprise. I have purchased goods from you. We have a written agreement that payment has to be made within 20 days. So what is the due date? 20 days. Next, assume you are a small enterprise. I have purchased goods from you. We have an agreement between us and you have asked me to make the payment within 50 days. Within 50 days. But here they are telling as per the agreement or maximum 45 days, whichever is earlier. So if the days between, as per our agreement between you and me is more than 45 days, then it is restricted to 45 days. The number of days as per the agreement or within 45 days, whichever is earlier guys. So assume as per the agreement that it is only for 30 days. Then I have to make payment within 30 days. Clear? Yes. Next, there is no agreement between you and me. In that case, we are just working on trust basis. Then payment has to be made within 15 days. Sir, there is no agreement. No, sir. Yes, there is no agreement. But section 15 is telling I have to make payment within 15 days of accepting the goods or services, guys. Now, sir, what if the payments are not made within this timeline? Is it permanently disallowed? No. It will be allowed, but in the year in which payment is made. In the year in which the payments are made. So you can see, however, if the sum is not paid within the time limit specified above, that is as per section 15, the deduction for expenses would be allowed in the previous year in which the payment is made. It is not permanent disallowed. It will be allowed, but in the year in which I am making payment to you. This is actually relevant to that payment which we were supposed to make at the end of the period, guys. At the end of the period. Sir, how come, sir? I will explain you. I will explain you with some illustrations. But please be careful. Again, I am telling, guys, this section 15 due date is only for the payments which are made by the assessee to whom? Micro and small enterprises. Sir, what about the above payments made by anyone to anyone? Made by anyone to anyone. Within what time the payments has to be made? Within the due date of filing income tax returns. There is no change in it. There is only one addition, and that addition is the payments made to micro and small enterprises. Just because to protect their interest, so large enterprises normally will dominate the small and medium enterprises by making payment very long period. They will take a lot of credit period and they will try to dominate the small and medium enterprises. So in order to protect them, the department has added this condition, guys. Clear? And here, sir, is there any category of payment covered? No, for any purchase of goods or rendering of service, anything. But the person who is receiving the payment should be small or medium enterprise. Sir, what is the full form of MSME? Micro, small or medium enterprises. But what is covered here is micro and small only. Please be careful. Micro and small. Sir, what about medium? Have they covered it? No. In section 43B, they have not covered medium enterprises. Only micro and small. I repeat, MSME covers micro, small, medium enterprises. But for section 43B, only payments made to micro and small are covered. Sir, what about medium? They have not covered it. So that means if I am making the payment to medium enterprises, can I make it even after the due date? Yes. Can I claim it as an expenses on accrual basis? Yes. Okay, we have some illustrations. I will quickly go through it, guys, to make you understand in a better way. X Limited purchases raw material on credit from Y Limited. So now for section 43B to apply, Y Limited should be either micro or small enterprise. Value of the invoice is 6,40,000. Date of invoice is 1st February. Date of acceptance of goods is 1st February. This date is important. Generally, payment is made by X Limited within 30 days. However, there is no written agreement about the time of payment. When there is no written agreement, payment has to be made within how many days, guys? Within 15 days. Within 15 days from what? Acceptance of goods. acceptance of goods. Y Limited is a small enterprise, it seems. So Y Limited is a small enterprise. Is section 43B applicable? Yes. For whom? X Limited. So for whatever payment X Limited is supposed to make to Y Limited, section 43B is applicable. Discuss in which previous year X Limited will be able to claim deduction if payment is made on. They have given 3 different scenarios: February 28th, 31st March, April 10th. Okay. There is no agreement about the time of payment. Consequently, payment should be made within 15 days of acceptance of goods as per MSME Development Act. That is, so when the goods are accepted, 1st February. Within 15 days from means on or before 16th February. On or before 16th February, guys. Okay. So there are 3 scenarios. Let us see. 1, 2, 3. If the payment is made on 28th February, is section 43B applicable? Yes, sir. Deduction is available on what basis? Payment basis. Sir, can I claim it on accrual basis, sir? I have incurred it. Yes, you can claim, but as 43B is applicable, deduction is allowed on payment basis. That is the year in which payment is made. Now, can I claim the deduction in 23-24? Yes. Guys, understand this scenario. Very interesting. Payment is not made within the due date as per MSME Act, but it is made before 31st March. Now, what they have told here is, if payment is not made within the due date mentioned in MSME Act, then the payment will be allowed in the year in which payment is made. In the year in which payment is made. Sir, here we have crossed the due date. 16th is the due date. We have crossed it. So, I am making payment on 28th February. So, 43B tells you cannot claim it in this year. But, sir, I made it on 28th February. No, sir. Yes, you can claim it in the year in which you have made the payment. That means, sir, in 23-24 itself, I have made the payment within 31st March. Can I claim it? Yes, you can claim it. Yes, you can claim it. I repeat, if you have not made the payment within the due date, the expenditure will be allowed in the year in which payment is made. Payment is made after due date, but within the end of the previous year. So, can I claim it in the same year? Yes, sir. So next you see, payment is made on 31st March. Have I made the payment within the due date? No, no, no. So section 43B is applicable on? Yes, it is applicable. On what basis it is allowed? Payment basis. Is payment made before 31st March of previous year? Yes. So is it allowed? Yes, sir. Next you see, if payment is made on April 10th, is payment made within the due date? No, sir. So is 43B applicable? Yes. So payment is, expenditure is allowed on what basis? Payment basis. So that means it is allowed in which year? 24-25, because payment is not made before 31st March. So within the due date, the payment is not made, and the payment is made after 31st March of the previous year. So it will be allowed in the year in which payment is made. Which previous year? 24-25. That is next year. Good? Yes. One more example. Z Limited purchases goods. Invoice value 11,20,000 on credit from Y Limited, a micro or small enterprise. Okay, A Limited, Z Limited has purchased from A Limited. So A Limited is a micro or small enterprise as per MSMED Act. Okay, date of purchase is 2nd March. As per written agreement with A, Z Limited has to make the payment on or before 30th April. So there is a written agreement. If there is a written agreement, payment has to be made with as the date as per the agreement or within 45 days. Within 45 days of accepting the goods, whichever is earlier. So what is the due date as per the agreement, guys? 30th April. Okay. However, the payment is made as follows. 1 lakh paid on 30th March, 2 lakh paid on 6th April, 4 lakh paid on 15th April, 4,20,000 paid on 6th May. So it is paid in installments. Date of acceptance of goods is March 2nd. Due date for payment as per MSMED Act is April 16th. Sir, they have given it as April 30th. No, sir. But we have to go as per that. The date as per the agreement or within 45 days, whichever is earlier. So, when the goods has been accepted, 2nd March. So, calculate 45 days from there. We will get April 16th. April 16th or April 30th, whichever is earlier, April 16th. So what is the due date as per MSME Act? It is April 16th, guys. So deduction will be as follows. All the installments we will see. So the due date for all the payments as per this transaction is April 16th. So first payment is made on March 30th. Sir, is it allowed? Yes. Is section 43B applicable? No, because payment is made within the due date. So 43B is not applicable. Yes. So deduction is allowed on what basis? Accrual basis. As the payment is made on within due date, you can claim it. So in which previous year it is allowed? 23-24. Then next payment is made within on April 6th. Again within the due date. Yes, sir. So is 43B applicable? No. Can I claim it on accrual basis? Yes. In which year? 23-24. 23-24. Next, April 15th. Is it made within the due date? Yes, sir. So is section 43B applicable? No. Can I claim it on accrual basis? Yes. How? In which year? 23-24. Okay, sir. Last payment you observe. The payment is made on May 6th, 2024. May 6th, 2024. Is it made within the due date as per MSMED Act? No, sir. So is section 43B applicable? Yes. So deduction is allowed on what basis? Payment basis. When the payment is made in the previous year, 24-25. You can observe May 6th, 2024. So that means it will be allowed in which year? 24-25. 24-25, guys. Hope you guys got it. Yes. Now you may ask me, sir, in these two cases also, payment was made in next year, no, sir? Yes. But it was made within the due date mentioned in MSMED Act. And in that case, section 43B will not be applicable. When section 43B is not applicable, you can claim the expenditure on accrual basis. When the expenditure was accrued in previous year 23-24, even though you have paid it in the next year, still you have paid within the due date. That means you can claim it on accrual basis. You can claim it on accrual basis. So this section alone means this part actually has a relevance with respect to the transaction which would have been entered by the end of the year, guys. By the end of the year. Okay. Now assume, I will just give an example. Sir, I had entered into a transaction in May 23. I made payment in March 24. Can I claim it in 23-24 only? Yes. You would have not made the payment within the due date, but you have made before the year end. Before the year end. I repeat this example. Assume I have entered into a transaction with you in May. So I was supposed to make the payment maximum within 45 days. Yes, if there is agreement. But I made payment, assume, on March 20th, 2024. So I have made the payment before 31st March 2024. Yes, sir. That is before the end of the previous year. Can I claim it? Yes. On payment basis, I can claim it in previous year 23-24 itself. Okay, guys. Quickly. Next, fourth head of income. As per the proviso to section 48, the cost of acquisition or cost of improvement shall not include the amount of interest claimed as deduction under section 24 or chapter 6 CA. Guys, under section 24, interest on housing loan is allowed. Now, sir, when I have claimed the deduction for interest on housing loan under section 24 or even under chapter 6 CA under section 80 series, can I again claim it as cost of acquisition or cost of improvement? No. Your cost of acquisition or cost of improvement will not include the interest component for which you already claimed deduction either under section 24 or under chapter 6A deductions. Clear? Yes. So that is a proviso which is added. Then unit 5, that is the last head of income, income from other sources. Share premiums in excess of fair market value to be treated as income as per section 56 to 7B. This is for the company. If they issue the share at a price more than their face value, then whatever is the difference between the issue price and fair market value. Guys, first we have to check like this. Just a minute. Now assume, sir, is issue price more than face value? You check. If yes, then check what is the difference between issue price and fair market value. Assume, guys, issue price is 120 rupees, whereas fair market value is 100 rupees. What is the difference? 20 rupees. This 20 rupees is taxable in the hands of company. Issue price in excess of fair market value. Please be careful. First, we will check whether issue price is more than face value. Then we will see what is the difference between issue price and fair market value. The difference is taxable in the hands of company. Now, here the shareholder previously was only resident, but now they have made it as any person, that is resident as well as non-resident. I will just read this sentence. where a company, not being a company in which public are substantially interested, in simple private company guys, receives in the any previous year from any person. This is called shareholder from any person. Previously it was resident, but now it is from any person. That is either resident or non-resident. Any consideration for issue of shares that exceeds the face value of such shares. The aggregate consideration received for such shares as exceeds fair market value of the shares shall be taxable under the head other sources. And there are two exceptions also for this, where it is not applicable. Yes, guys. So small change wherever it is there, which I would have highlighted in red color, you guys can update in the material itself so that it would be easy for you. Next change is with respect to 11th point. Sum received including the amount allocated by way of bonus under a life insurance policy other than ULIP and Keyman insurance policy, which is not exempt under section 1010D. If exemption is available, you will claim full exemption. If it is not exempt, only then it will be taxable under other sources. Guys, here all this we have covered in our regular class, including the last point. One small change here is, here they have told now aggregate. If the aggregate amount of premium payable. Guys, see, if the policy is purchased on or after 1st April 2012, the maximum premium you can pay per year for a policy is 10% of the sum assured. If the policy is taken in the name of a person who is suffering from disabled, that is assessee himself, or is suffering from specified disease as per section 80 DDP, and if the policy is taken on or after 1st April 2013, then they have increased it to 15% instead of 10%. If not, in all other cases, it would be 10%, guys. But from 1st April 2023, this percentages will continue. Whatever is the 10%, 15% is only in two special cases. Rest all cases is 10%, guys. So if the policy is taken on or after 1st April 2023, then the maximum premium you will pay per year is 10% of the sum assured. Plus, there is also a monetary limit of 5 lakh maximum. Aggregate 5 lakh maximum. Sir, what is that aggregate? Guys, if I had taken multiple policies, assume I have 3 policies in my name. All policies put together, I cannot pay more than 5 lakh in a year. I cannot pay more than 5 lakh in a year. Then, sir, what if I pay more than 5 lakh? Then exemption will be available only to the extent the premium paid up to 5 lakh. Up to 5 lakh, guys. So what is it? I have just given some examples here. Let us see illustrations. So in all this illustration, guys, policy is taken on or after 1st April 2023. Okay, for simplification. So assume a person has 3 policy X, Y, Z, sum assured 30 lakh, 40 lakh, 60 lakh. Okay, yearly premium 4 lakh 50, 6 lakh. Guys, you can observe it is more than 10%. Every year exactly 10%. Last case exactly 10%. So when the premium paid is more than 10% of the sum assured, can I claim exemption? No. And here you can see for policy Z it is exactly 10%, but it is more than 5 lakh. But it is more than 5 lakh. So even here exemption is not available. Exemption is not available. Okay, sir. Then illustration 2 you can see. Policy is taken on or after 1st April 2023. Sum assured is 50, 40, 60. Premium paid, yearly premium 4 lakh, 3 lakh 50, 6 lakh. You can observe everywhere it is within 10%. Here exactly 10%. Now for policy X, can I claim exemption? Yes, I can claim exemption. Policy Y, can I claim? See, percentage wise it is within the limit. But monetary limit. Sir, 3 lakh 50 no sir. Yes, but if you add up both, how much will you get? 4 lakh plus 3 lakh 50. You will get 7 lakh 50. Can you pay more than 5 lakh? No. That means exemption is not available for this policy. Exemption is not available for this policy, guys. Just so. So, please listen carefully. I will tell again. Sir, aggregate payment made both put together. Both the policies put together will come to how much? 7 lakh 50. Is it crossing 5 lakh? Yes, you cannot claim. So, second policy you cannot claim. First policy can I claim, sir? Yes, individually it is within 5 lakh. I can claim it. Now you can ask me, sir, instead of X, can I claim only Y? Yes, you can. Because percentage wise it is within the limit. Even monetary wise it is within 5 lakh. Can I claim only Y, sir? Yes. But when you are claiming individually, go for the policy wherever the benefit is maximum. Where the sum assured is maximum, policy X. Go with that. You have a choice between X and Y, but I would suggest go with policy X. Go with policy X as the benefit would be maximum. Yes, so policy Z I cannot claim at all because individually itself it is more than 5 lakh. I cannot claim at all. Yes, sir. Illustration 3, you can see policies are taken on or after 1st April 2023. Sum assured 30 lakh, 30 lakh, 30 lakh, 20 lakh. Premium paid 2 lakh, 2 lakh, 2 lakh. Guys, you can observe individually. Is it within 10%? Yes. Is it within 10%? Yes. It is exactly 10%. So percentage wise, everything is taken care. 10 or less. Okay, sir. It should not be more than 10%. Okay, sir. Now, can I claim exemption for policy X? Yes. Can I claim it for policy Y also? Yes. Because aggregate, you see, 2 plus 2 yearly, it is within 5 lakh. Yearly, it is within 5 lakh. Then can I claim for Z also? No. Why, sir? Because 2 plus 2 plus 2, if you take, it will be 6 lakh. You cannot cross 5 lakh. So you cannot claim for Z. You cannot claim for Z. Now you can ask me, sir, instead of X and Y, can I claim X and Z or Y and Z? Yes, you can claim. But again, you try to take the maximum benefit. Sum assured for policy X and Y is 30-30, where the maximum benefit is there. Go for it. Whereas Z, you can see, it is only 20 lakh. Nothing wrong if you select Z, but go for wherever it is maximum. Clear? So, in simple, if I have to tell, in illustration 3, you can claim exemption only for 2 policies. You choose whichever you want. I suggest X and Y. Last one, illustration 4. Date of the policy is on or after 1st April 2023. Sum assured is 70, 80, 60 lakh. Okay, sir. Yearly premium is 7, 6 lakh, 50, 6 lakh. You can observe percentage wise, everything is within 10%, on less than or equal to 10%. Percentage wise, everything is taken care. Yes, sir. But monetary limit, each policy is more than 5 lakh. For each policy, the premium amount is more than 5 lakh. So can I claim exemption? No, not even for single policy you can claim. So that means exemption is not available for any policy, guys. Any policy. Is that clear? To summarize, so for the policies which are taken on or after 1st April 2023, both percentage limit as well as monetary limit we have to check. Percentage limit will always be individual policy wise, not overall, individual policy wise. Whereas monetary limit of 5 lakh will be individual policy wise as well as aggregate. Even if you have multiple policy, you can claim only exemption for the policies where the aggregate premium is within 5 lakh. Within 5 lakh, guys. Clear? Yes. Please be careful. This monetary limit has come only from 1st April 2023. That is the beginning of our previous year. Before that, only percentages. Only percentage. So please observe the date of the policy while answering, guys. Yes, sir. And please be careful, whatever these conditions and all we are checking is only when the policy matures on the expiry of the term. Sir, what if the policy matures on the expiry of the insured? Then there is no condition. It is fully exempt for the nominee who is receiving the sum assured. Full exemption is available, guys. So percentage limit is also not applicable. Monetary limit also would be not applicable. So that is what I have mentioned here. Any sum received on the death of the person is exempt irrespective of the annual premium payable on the policy. Yes, all these notes and all we already covered in the class. Now, sir, what is the amount taxable? If at all, if it is taxable, that is when section 1010D is not available, it is taxable under which head? Income from other sources, except Keyman insurance policy and ULIP. ULIP, if it is taxable, it will be taxable under the head capital gains. Whereas Keyman insurance policy, there are 3 possibilities. It can be taxable under salary head or PGBP or other sources. All 3 cannot happen, any one. Okay, now, yes. Coming to any policy other than this 2, that is ULIP or Keyman insurance policy, it will be always taxable under other sources. Now, what amount would be taxable, guys? So you can see sum received under a life insurance policy on the expiry of the term, including bonus, we call it as sum assured or policy amount, less total amount of premium paid during the policy, you have to take it. From that, for premium paid, you would have claimed a deduction under section 80C during the term of the policy for whatever premium you have paid. Yes, that much you have to reduce. That much you have to reduce. The remaining amount you will take it to the outer column. Clear? The balance would be taxable, guys. I will just give an example. Assume, guys, my policy has matured and I have received 40 lakh rupees. I am alive and I have received 40 lakh rupees. Okay. During the term of the policy, I had paid a premium, assume totally 30 lakh. I have paid a premium of 30 lakh. And for yearly premium, whatever I pay, I can claim deduction under section 80C during the term of the policy. Yes. But I would have not claimed entire 30 lakh. Why? Because guys, percentage wise limit is there. Plus, there are many other items covered under section 80C. You know, the big list is covered under section 80C and the maximum deduction available is 1,50,000. Clear? So considering all that, assume guys, I have claimed maximum deduction is only 20 lakh under section 80C for whatever premium I have paid. Remaining is how much? 10 lakh. So take it to the outer column, reduce it. Remaining 30 lakh will be taxable, guys. Remaining 30 lakh would be taxable. Yes. Hello. Hello. Vinay, can you come down quickly? Yes. Quickly. Yeah, you can come in. Vinayak, the camera went to sleep mode automatically. The entire screen was black.
In black, right?
Yeah.
What happens?
No, better let it be normal like this only.
Okay.
Don't,
Yeah, I know. I didn't do anything, sir. It was normal only.
because I just observed it was like
Yeah, it was normal. I
black.
didn't change any settings. I didn't do motion settings or nothing. It was normal only.
No, why did it go for sleep mode?
No idea, sir. I think it's new camera, right? Might be an issue of that. Right.
Okay, I can continue now.
Okay, sir. You can
Fine,
continue.
thank you. Yeah, so this is how we will calculate how much amount is taxable when the policy matures, if at all, if it is taxable. If it is exempt, you will not worry anything about this, guys. Yeah, that's all. Then coming to, and one more, guys, see, with respect to heads of income, in salary head, there is one amendment with respect to perquisite valuation for rent-free accommodation, which I have already covered in my regular class. Please be careful with that. Might be important for your exams. That is for non-government employee, the population as well as the percentage of salary has been changed. There is a small change in that. Please take care of it. That is with respect to salary head. Yeah. Next change is with respect to chapter 8, that is incomes which do not form part of total income. In simple, exempt income. There, guys, section 10AA, that is the deduction which is available with respect to export profit. There is one small points which are added, that is 6th and 7th point you can see, which I have highlighted in red color, the additional condition. 6th one, no deduction under section 10AA would be allowed to an assessee who does not furnish a return of income on or before the due date specified under section 139 subsection 1. So if you are an assessee who want to claim deduction under section 10AA with respect to your export profit, then you have to file the return within the due date. Sir, what if I file belated return? Can I claim the deduction under section 10AA? No, you cannot. You will be denied the deduction under section 10AA. Then coming to section condition 7, deduction under section 10AA shall be available if the proceeds from the sale of goods or provision of services is received in or brought into India by the assessee in convertible foreign exchange within a period of 6 months from the end of previous year, that is 31st March 2024, or within such further period as may be allowed by the competent authority. Guys, here you are making profit by exporting, and on that export profit you are getting deduction. Indian government is telling bring that money within India or bring it to Indian economy within 6 months from the end of previous year. Or if there is any difficulty you are facing, they may extend it, but the standard time is within 6 months from the end of previous year. Not from the in 6 months is not from the date of sale. It is 6 months from the end of previous year. That is 31st March 24 is the end of our previous year. 6 months from there. 6 months from there, guys. Yes. Next change is with respect to TDS TCS, guys. That is in chapter 7. So there we have section 206 AB, which covers specified person. If the payment is made to a specified person who is a payee, then TDS would be deducted at either of the following rate: twice the actual rate or 5%, whichever is higher. Correct? And it is not applicable for few sections also, guys. Yes, sir. And we had covered who is specified person. Only if the payee is a specified person, then section 206 AB is applicable, right? Yes. Who is specified person, guys? So now there is a small change in it. Please be careful. Guys, for us, what is the previous year? 23-24. So we have to check the last year, 22-23. For 22-23, if TDS plus TCS under all sections put together, if it is 50,000 or more, plus the person has not filed the return for 22-23 and the due date to file the return is over. The due date to file the return is over. In that case, for previous year 23-24, he will be treated as specified person. Only 1 year we have to take here. I repeat once again. Guys, for previous year 23-24, we are checking whether the payee is a specified person or not. We have to go back only for one last year and see. In the last year, TDS as well as TCS both put together under all sections, is it deducted as well as collected 50,000 or more? And has he filed his returns within the due date? If the answer is no, then in the current previous year, he will be treated as specified person. Clear? Yes. That means we have to check only the last 1 year, not 2 years. Meaning of specified person: a person who has not filed the return of income for both, not both now, it is assessment year relevant to the previous year, immediately prior to the previous year, which is our previous year, 23-24. Check the last year, in which tax is required to be deducted, for which the time limit of filing the return under section 139(1) has expired, and the aggregate of tax deducted at source and tax collected at source in his case is 50,000 or more in previous year. Not 2 years, only 1 year. And here we are checking for which year, guys? Last year means 22-23. Yeah? Yes. So, however, the specified person would not include a non-resident who does not have a permanent establishment in India. This was already there, but now there is one addition. A person who is not required to furnish the return of income for the assessment year relevant to the said previous year and is notified by the government. The government has notified Reserve Bank of India. That means RBI can never be a specified person. Can never be a specified person. So if the payee is a RBI, then section 206 AB will not be applicable, guys. Will not be applicable. Same way, TCS provision was there. That is, you can see under section 206 CCA. Section 206 CCA requires tax to be collected at source under the provisions of this chapter on any sum or amount received by a person from a specified person. That is, if the buyer is a specified person, then TCS should be collected at either of the two rates. That is twice the actual rate of TCS or 5%, guys. Yes. And here also specified person means same, guys. I will just explain it. Specified person means, guys, we are checking it for 23-24. Okay. But we have to go back to last year, 22-23. See whether TDS plus TCS are both put together in 22-23 is 50,000 or more. Is 50,000 or more. Okay. If yes, see whether they have filed the returns within the due date. If they have filed, well and good. In the current year, they will not be specified person. Sir, what if they have not filed the returns within the due date and the due date is already expired? Then in the current year, they are treated as specified person. They are treated as specified person, guys. Okay. However, the specified person will not include the following. Non-resident who does not have a permanent establishment in India, which was already there. Now the new addition is a person who is not required to furnish the return of income for the assessment year relevant to the said previous year and is notified by the central government in this behalf. The central government has notified Reserve Bank of India for this purpose. Clear, guys? Yes. So though two people are there in simple, non-resident who does not have any permanent establishment in India, that is office or branch, and the second one is Reserve Bank of India. Clear? So whatever changes are there, it is applicable for both the section 206 CCA as well as section 206 AB. Clear? Same change, but it has an impact on both the sections. Yes, guys. So this is all about the amendments applicable for December 2024 exams. So do you make use of the same and study well for your exams, guys. All the best.